Hello, this is June Collier, Executive Vice President with Myecon. In this training, we're going to teach the Cashflow Strategist. So log into your back office, and in your back office, across the menu bar, you're going to find the tools. Hover over tools, and then you're going to see Cashflow Strategist. Go ahead and click on Cashflow Strategist. Once you're inside of the Cashflow Strategist, what we want to do is we want to create a new cash flow strategist. Now you can create as many of these as you want to, but we're going to create a new cash flow strategist. Let's give our cash flow strategist a file name. In this example, we've named the cash flow strategist John Sample 500. Now let's take a look at our top 5 financial goals. We want to number these goals 1 through 5 in the boxes below of most important to you to least important. Note that everyone's going to have a different priority list, but we want you to just list down your priorities here with your top financial goals. The next thing that we're going to look at is our retirement freedom goal, and we're going to go through each one step by step. The first question asks, what's the least amount of monthly income you desire at retirement? Now let's be realistic with this one. Remember, you can create multiple cash flow strategists. So if you want to be, on the high side, you can do that. But in this case, we're just saying that we want $6,000 a month. That's what we're living on right now. That's what we feel like we'll be able to live off of during retirement. So we're asking for $6,000. The next question is, what year at the latest do you plan to retire? So we've entered 2030. Question number 3 asks, how much of your monthly retirement income do you expect to receive from Social Security and company paid pension plans? Not what you will receive from your 401k, 403b, IRAs, CDs, etc. So this is strictly Social Security and pensions. So if you don't know what you're going to receive or don't know an estimate, you can go to ssa.gov and they will give you an idea of how much you would receive in Social Security payments. In this case, we're going to put down $1,500. Question number 4, what is the approximate value of your investment portfolio now? So what do we have in mutual funds, 401ks, IRAs, excluding the company paid pension plans and Social Security? So we have saved right now in our retirement, we have saved $15,000. So we're going to put $15,000. Question number 5 asks, how much money do you currently invest monthly on long-term savings? I'm going to put $100 here. Again, these are your numbers, so you want to answer these questions truthfully. Question number 6, how much additional money monthly can you invest into long-term savings now? So I guess I can stretch myself, and I can stretch for another $100 that I can save right now. And then question number 7 says, how much money do you have set aside for emergencies? You need at least 6 months of living expenses. Currently, I only have $2,000 set aside for emergencies. Question number 8, do you feel you currently have a plan in place to accomplish your retirement goal in your desired time frame? The answer to this is no. The next step that we're going to do is we're going to take a look at debt elimination. So we're going to start entering some of our creditors for our debt elimination. As we're entering our creditors or our debt elimination plan here, if you have more debt to add than boxes that are available, there's a button here that says add. If you'll click that, that will create an additional box for you so that you can add additional debt. So what I'm going to do here in the next couple of seconds is I'm going to add all of my debt here in this box. So I've added all of my debt. I've got a MasterCard with $10,000 on it. I've got a Visa with $8,000, a car payment with a balance of $17,000, and a mortgage with a balance of $153,000. And then I've got my minimum payments, $208 for the MasterCard, $175 for the Visa, $525 for the car, and $1,479 for my mortgage. So I've added all of my debt in this box. The next thing that I'm going to do is I'm going to scroll down and I'm going to take a look at my monthly reoccurring expenses. So I'm going to do the same thing here. I'm going to enter my reoccurring expenses monthly, and if I need more boxes, I'll click the add button. So these are my monthly recurring expenses. I've got a cell phone bill at $95 a month, utilities at $400 a month, a cable bill at $135 a month, life insurance at $200 a month, and then entertainment and eating out, I spent about $250 a month. Now the key in this section is to list what you currently pay, and then try to figure out if you can save some costs and come up with some alternatives where you can pay a little less. So for example, with my cell phone plan, I can probably go out and find a plan that I can get a lot less expensive than $95. Let's just say that I go out and get a $55 a month cell phone plan. And so what happens is once I put in that $55 a month, you will see that it will show that I have a monthly savings of $40. So I just saved myself $40. So what we're going to do is we're going to now go through each one of these monthly recurring expenses to see if we can cut our costs by some dollar amount. So in our example, we shaved $50 off of our utilities. That saved us $50. We decided to cut back on our cable from $135 to $85, again saving $50 again. Life insurance, we were able to find a new policy that was cheaper. That saved us $55. And then eating out, we decided we was going to cut back a little bit on eating out and save $50 there. So here's what our recurring monthly expenses are, and then we've got our new costs of the savings that we would have by just shopping better and looking for bargains. Now that we've completed this, we want to click Save and Return to List. So now you'll see that we have John Sample. Part A is where we entered our information into the Cashflow Strategist. Part B allows us to further refine the Cashflow Strategist by changing our preferences for other savings, business income, debt reduction, and investing. And then Part C is the printable version of our Cashflow Strategist. Let's take a look at Part B. So here's what we're going to do. We're going to just take and say that we're going to get a rate of return on our investments at 8%. So we'll leave that at 8%. We said that we wanted to retire in 2030. So there's retirement in 2030. We also indicated that we wanted $6,000 a month at retirement. Currently, we know that we're going to receive $1,500 from Social Security. So of that $6,000 that we need, we're getting $1,500 from Social Security. So the reality is that we only need $4,500 from our investments. So we need a remaining $4,500 to reach our goal. Based on an 8% rate of return, we would need $675,000 in the bank that would earn 8% a year, which would give us the remaining $4,500. Now, we had $15,000 that we already had in 401ks and IRAs, things of that nature. That $15,000 would grow at 8%. It would grow to $45,802.26 by 2030. So we would subtract the $45,802 from the $675. That would leave us with a remaining balance of $629,000 in order for us to hit our objective. In order for us to hit $629,000, we would need to be investing on a monthly basis $2,042.70. Right now we're investing $100 a month. So our net monthly dollar amount that's needed to invest is $1,942.70. So let's scroll down and take a look at business income. Let's just assume that from business income, we are going to bring in $100 a month in our Myecon business. We're going to assume that with our tax withholdings and with us updating our W-4 that we were able to bring in an extra $250. So we freed up $250 of cash here. Step 3, minimize expenses with our smart consumer purchasing. We were spending $1,080 on recurring monthly expenses, but after we decided to shave back and do some cutbacks, we were able to have a new payment of $835, which freed us up with another $245. We also said that we could stretch ourselves for an extra $100. That gives us cash flow increase of $345. If we apply the entire amount of $695 of cash flow that we have. If we apply that entire amount to our debt, we'll pay off our debt in 77 months. So this just shows how we're going to do that. We're going to pay off debt number one first, which is our car payment at $17,000. The current payment is $525. We would take the extra $695, add it to the $525. That would give us a new payment of $1,220 when we could pay off that car in 14 months. We then have $1,220 available. We would then take that $1,220 and add it to the next payment, which is our Visa. So instead of $175, we would actually be paying $13.95 a month on that Visa, and in 6 months that would be paid off. We take that $13.95, we roll it into our MasterCard. Our MasterCard currently is at $208, but if we add the $13.95, we're now going to be paying $1,603, and we'll knock that MasterCard out in seven months. Then finally, our mortgage. We'll take the $1,603, we'll add it to the $1,479, which will give us $3,082 on our mortgage, and in 50 months our mortgage will be paid off, and we'll be debt free in a total of 77 months, including our mortgage. That's 6 years and 5 months being totally debt free, including our mortgage. That's pretty amazing. Now this alone is just enough to blow your mind. But when we pay our mortgage off, we'll be completely debt free by 2022. The cash flow that's created from the debt elimination will be $2,387, and our available net monthly cash flow is $3,082. So now we've got this $3,082 that's sitting here that we can now apply to our investments. So now we're going to take that $3,082 and apply it to our investments. Now, if you want to use some of this for yourself, you can go in here and make some changes, and it will update the day that you'll be able to retire. But we're just going to say that we're going to throw the entire $3,082 towards our investments. So let's take a look at what happens if we take that $3,082 and apply it to our investments. So let's make sure that you understand this portion here, because sometimes people can get tripped up on it. Remember, we started in 2016. We already had $15,000 saved in IRAs and 401ks. We also were already investing $100 a month into our retirement. So we had $15,100. All the rest of the money was used towards debt elimination. So you didn't see any money that was going on here. But that $15,100 grew. And by the time we became debt free in 2022, we had $25,020.11. We also had $10,000.20 that we had been investing from the $100 a month that we were putting towards our investment. So a grand total of the $25,000 plus the $10,000, that gives us a grand total of $35,040. So the day that we became debt free, we also had $35,040 in our investments. Now that we have $35,040 in our investments, we come here and we start to invest. So what you're going to see is our existing portfolio is continuing to grow. So this money is money that started with the $15,000 and is continuing to grow. We also have our existing monthly investment of $100. That amount of money is continuing to grow as well. So if we take the $27,000 plus the $12,000, that's going to grow to $39,000. But look what happens. We now take the $3,082 that we had now saved to add to our investments. $3,082 over a 1 year period is going to grow to $38,370. So if we take that $38,000 plus the $39,000 that we have here, that's going to give us a grand total of $77,000 in our investment. And then this thing really begins to start snowballing. And as you can see, all of the money that's being added up starts to really snowball. And by the time we reach 2033, we have reached our goal of having $754,000 in our bank account. More than enough for us to meet that goal. And if we decide that we just want to continue to push on for another 20 years, you can see that we can actually accumulate over $5 million over another 20-year period, 20-year period. So this is your cash flow strategist. Make sure that you go in, you fill in the numbers, you take your numbers, be realistic so that you can understand what your blueprint looks like and how long it's going to take you to get out of debt, how long it's going to take you to pay off your house, how long it's going to take you to save the amount of money that you need to retire comfortably.